Let's welcome on board our experts then and figure out how exactly to navigate this market. Got Deepak Shenoy on the fundamentals, Naresh Mirani, Kunal Potra on the charts. Kunal, one would have thought that today would be perhaps a durable bottom, and I'm using perhaps quote unquote, but what's your sense in the Nifty?
Yeah, but I think it's a slight better day because at least the number of stocks which are falling by a margin of 5-10% and the intensity of intraday sell-off is not as extreme as what we had seen over the last 3-4 days specifically. But yeah, I think on one hand, the indices are just about trading, closer to that 23,400 levels for the Nifty, Bank Nifty showing slight signs of positivity. But then, we've not managed to break past about the yesterday's trading high for both of these indices, for either of the indices, both Nifty as well as Bank Nifty. So I think in that case, we are still into that downtrending kind of a mode. So I think what matters over here now is that if over the next couple of days we see two signs of improvement. One is whether the market breadth starts to improve. That's probably a sign that the markets are getting back into a zone of establishing a range for itself, and the pace of sell-off could that could lessen significantly. And the other most interesting one is if we manage to break past about the yesterday's trading high, because we've not seen that pattern occurring for both the Nifty as well as for the Bank Nifty over the last 4 to 5 trading sessions.
Okay, so that's the take coming in. Durable bottom is what is missing at the moment. Naresh, what's your view? This outperformance that we're seeing from the banking index, is that something which is likely to continue?
So we need to see a reversal across a few indices, the top weight. So today, for example, we are down 100 odd points. 80 points is the impact from the Nifty IT. In the same way, banking has been holding on, but we are still struggling around that 50,000, 50,400, which has been the low for the last few months. So once we see the Bank Nifty sustaining 50,800, 51,000, the Nifty sustaining 23,700, that's the price point where we say a reversal is done. In the last two sessions, the breadth is not as bad. The recovery from the intraday lows has been there. We've been having a tighter and tighter range in the last two sessions. So now we need a range reversal on the upside for confirmation. For now, selling seems to be reducing in terms of price action. But for now, we are in that important support band for the Nifty as well as on the Bank Nifty. But reversal signals are yet not confirmed.
Right. Deepak, hi, afternoon. Welcome to the show. What is your own sense? Are we close to a bottom just yet? And does it even matter after the individual stock prices, the way they've cracked? Have you already been a buyer?
Aisha, I think, you can only look at tops or bottoms in hindsight. So if I said yes, it'd probably be much after the bottom has been made. But then, one of the things that's happened right now is it's not like the FII selling of the past when, India's fundamentals were actually quite strong in terms of corporate earnings. This time, the corporate earnings numbers have also been a little bit weaker. We've been overvalued with respect to the rest of perhaps the world, where we continue to face relatively high inflation and also have a relatively higher PE ratio overall compared to the rest of the world. But then the growth opportunities in India are also immense. But it will take some time before corporate results start to come back in a meaningful way upwards. We're seeing a lot of disappointments in stocks that probably had run away too much in terms of valuation. So those valuations are correcting. So these stocks fall 30, 40, 50%. But you don't see overall portfolios falling that much. So if your portfolio is well diversified, has a little bit of banks, has a little bit of IT, a little bit of other industries as well, you might see some of your stocks falling 30 or 40%, but then your overall portfolio will be less than, even in the PMS we run, our overall portfolio is probably down by maybe about 10% at the max, which is what the index is. So I don't feel that this is a meaningful correction yet for us to say, let's go in and just buy everything that we can. But we are adding more to portfolio positions as we see, because some of these some of the stocks, especially in the large caps, still hold a lot of value, whether it's Reliance or L&T or a bunch of others. And I think they have not meaningfully participated on the upside, but have seen a reasonable part of the downside. So it gives us the opportunity to say they will probably be good positions to pick on for the future.
Let's see, but the future seems to be a bit uncertain at the moment, because the jury is out whether after this 10% plus kind of correction that we have seen in the market, are we headed lower, or is there a bit of a bottom that we'll see at some point of time? But if you had to bottom fish, Deepak, would you buy into a stock like Honasa if you track that one?
So these are falling knives in that sense because you don't have all the information yet. There is a considerably high price compared to profits that have come in from the company. Even when it was profitable, the price was considerably higher. So having a 30, 40, 50% correction would almost be normal. But also remember that many of in Honasa and a few other startup companies, there are lots of institutional investors that want to sell. So that always provide a selling pressure to a stock once it goes past the holding periods that are minimum holding periods that are required. So I think that adds another layer of pressure to the stock. More importantly, the business itself is not giving us the kind of confidence that we could see this company being valued at 3x, 4x what its current levels are in the future. And that's why it's perhaps not such a great idea to pick it right now. Perhaps there's a better price for it at which we will probably buy it, but I don't think this is the price or close to this. It would have to fall meaningfully from here for any of these, many of these companies to come in into our portfolio. I think it's better to bottom fish at stocks that haven't done meaningfully well in the last 3 or 4 years, but have now come down to much reasonable valuations. And the biggest example of this perhaps is HDFC Bank. And so it might provide a better medium-term growth story than some of the stocks that have just fallen on the basis of bad results.
Point. And I'm sure there's a longer list than HDFC Bank as well. Deepak, we'll just get back with you. But here are Hemang Jani as well and Karan Tarani on what they had to say about Honasa.
This is not like a normal consumer company, wherein there was a certain expectations of growth and the company actually delivered lower growth because of either urban, slowdown, etc., etc. This is a case of hyped expectations by the promoters, by the analyst community, and trying to justify unreasonable and very high valuations. And now, there is an effort to kind of do some sort of a salvage by saying that, the distribution model is not right. There is a quick commerce which is leading to some sort of a disruption. I think in a bull market, in an exuberance phase, you will find many promoters, investment bankers who are trying to push through certain themes and narratives. And this is just one such narrative. If you actually do a ground level check, I honestly don't know how many people, end up buying this kind of products at the ground level also, which requires some sort of a detailed check. So I definitely would avoid, doing any sort of, buying into this kind of companies. I think it's time to kind of do a much more filter, much more detailed work in terms of what's really happening, and then only take a call.
Okay, so that's the view coming in, and there seems to be a bit of a consensus there, both from Deepak as well as Hemang, that the full information is not out and it's a bit of a falling knife. So at some point it might become a good buy, but maybe not just yet. Let's see what tomorrow holds, whether there's a bit of a recovery from the lows or otherwise what really the situation pans out. But Deepak, we were talking about IT and the kind of slide it's seeing today. What's the view? Because, yeah, on one hand, this is one sector which is expected to go only better from here on. At least those headwinds seems to be over. It's only a question of when. 3 months, 6 months, 9 months might be the question. So are you looking at buying IT right now?
Some, Manisha, we have a few stocks in our portfolio, but I think the bigger thing is going to be about how budgets change. Now, a lot of things will change with the US administration changing. They're talking about reducing headcount in government departments. A lot of IT companies do a lot of work for government departments or through other vendors that actually produce or provide services to government department. So that to that extent, business may get affected in some way, but there may be other areas where business will actually improve because a lot of projects have been kept pending based on who will become president, because I think policies were quite radically different, especially when you're talking about one candidate was talking about taxing unrealized gains versus another was something else. So there is now a little bit more clarity in which side is going to go forward. So I think from January onward, we should get more clarity in what part of the businesses start moving forward, and therefore which of the IT companies will relatively succeed. I would say wait for a quarter, but I'm building up positions anyhow. We're anyhow adding a little more to our IT portfolio. But that's also because we had become too underweight on it, and the stocks have fallen, so the percentage has fallen even more in our portfolio. So I'm happy to pick it back up to that percentage which we want, and then we'll see where January and February leads us. It's both Indian budgets and the US administration change that will dictate a lot for IT companies, at least from what I see.
A further slip in the market. In fact, from the highest point, there has been a selling of around 0.6%, but from the lows as well, there has been a bit of a recovery. So in the middle of the range, that's how you can probably describe the market at this point of time. In the last few minutes, what have been the big movers? JK Lakshmi Cement is seeing a bit of a spike. You have Varun Beverages, which has been holding out quite okay over the last few trading sessions. So these are some of the names which are spiking up as we speak. And on the losing side, Ircon International from that entire railway pack is coming under pressure. Bank of Maharashtra is down, and some other PSUs like IOB, etc., Central Bank, they're all down in the trading session. So PSU as a basket seeing a bit of a red tick. But Kunal, what's your sense as far as the cement pack is concerned? Again, one of those sectors which hasn't done much in the last couple of years, but finally any signs that it might be coming out of a slumber?
Doesn't look like, because I think most of the cement stocks, large cap names like Ultratech Cement, whether it's Ambuja Cement, Sri Cement, etc., I think many of these stocks, they've been falling below their key moving averages, and these stocks have fallen before the markets actually went to a correction. So the tops for many of these stocks was somewhere in the month of June, July. For some of them, it was in the late in the month of August, and from there on, it's been a gradual correction for these stocks. Now, the concerning part was, for the cement stocks, was on the way up when the markets were, moving up higher. That was the point where these stocks underperformed, and now when the markets are going to a corrective phase, these stocks are correcting in line or more or less, underperforming the overall benchmark indices. So that's a sign of consistent weakness for these, these stocks within the sector. So my sense is that these stocks would continue to underperform. You might have one or two stocks which could give you those, odd bit of rally, but as an overall pack, I would believe that there could be an underperformance which could continue.
That on cement. Deepak, while talking about Honasa, you were saying that it's better to stay put in names like HDFC Bank, which haven't performed at all in the last 3 years. You think that underperformance has played out in Reliance as well over just the past 1 month?
Oh, it's in fact terribly underperforming in that context, in the sense it's down considerably more, I think, from its peak. But then one of the things that's happening right now is a lot of their businesses are seeing challenges in different ways. Jio has seen a reduction in the growth rate after they have increased prices. The retail business has seen a drop in general when we've seen this in DMart and most organized retail. Perhaps from the picking up of quick commerce, or perhaps from a generally lower interest in some of these elements because of fragmentation in that sense through competition. And the oil business is primarily mostly dependent on refining margins, and those margins have been volatile and not to the favor of Reliance recently. I think over time, of course, this is a cash machine. It does generate a lot of cash, despite and the retail and the geo businesses don't need as much. So I think at some point, some of the newer businesses which they're talking about, whether it is the solar and the hydrogen facilities, whether it is some of the other new ventures that they've started to take up, I think all of those will start playing a role in the longer term. But this needs at some point a demerger to happen, so you can segregate the businesses away and not have one cash flow determine the cash needs of all the other businesses. I think that would be the time at which you would value those businesses independently. Till then, we're going to have to wait and watch, how the business evolves. It's too big a company to actually just have one focus. So there are 3 or 4 different areas of focus. So no matter what happens now, one will do well, another two will do badly. It's not something that will kind of get the best valuation. I think we are betting on the fact that there will be a demerger or a revaluation at some point because of the individual businesses getting listed, and that's when the fortunes should change. I don't think it's particularly a bad company to own, but because of its relative size. But I think you have to be patient. We've been patient, and I think I'm willing to be patient another 5 or 10 years to let this company evolve into what I think it should be.
point taken. So let's give it some time, and then Reliance will emerge as in its new avatar, perhaps after the demerger. Deepak, on that note, we let you go. Thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.